Why don't we start with Amazon? What did you think about what you saw? And I thought it was pretty interesting. Cloud actually missed estimates, but still we're seeing the stock move higher.
Yeah, that's right. Amazon did have a couple of blemishes, and after yesterday, you might have thought that anything was going to get punished, but not Amazon today. And I think a lot of that had to do with the profitability of the company, which was the big surprise in the quarter, is that just a huge amount of profitability on the bottom line. And I think that gives investors a lot of comfort. And the sales numbers were decent. They were very close. So no surprise that stock is up. It also hasn't been one of the biggest performers of the Mag 7 or of the technology area. So some room to go for them.
You know, we're really seeing an impress investors. I want to get your take on it. They increased CapEx by 81%. At the same time, we saw margin expansion. That's pretty tough to do at the same time.
It really is, and the CapEx number was very important. And now that we're through the big CapEx spenders, the cloud spenders, you can see that they are all still focusing on CapEx and spending huge amounts of money. And the comments that Jassy made about the possibilities for AI and generative AI and their focus on that continues to mean that story continues to run. That should be good, a good read through for Nvidia, which will be the last of the Mag 7 to report.
Amazon's journey is not just a testament to its innovative prowess, but also a reflection of its unwavering ambition to excel in the highly competitive tech market. The company has consistently proved its mettle, be it with its groundbreaking supply chain innovations, its remarkable cloud computing services, or its relentless expansion into new markets. Now, as it ventures into the realm of artificial intelligence and silicon development, Amazon is setting a new benchmark, signaling its intent to redefine the very core of technological integration and performance. Recently, during its earnings call, Amazon's CEO, Andy Jassy, shared fascinating insights into the company's advanced approach to artificial intelligence and silicon development. His revelations were nothing short of remarkable, highlighting Amazon's strengthened strategic alliance with Nvidia Corporation, while concurrently pushing forward its own ambitious silicon innovation projects. This move sends a compelling and unmistakable message to the stock market and beyond, a demonstration of intent that commands attention. Yet, with much of the intricate details still cloaked in mystery, these moves invite intrigue and anticipation as stakeholders ponder what lies ahead. Jassy's bold announcement has invigorated discussions across financial and technological domains, sparking curiosity about the potential disruptions Amazon might bring to the sector. Welcome back, everyone, to Investocracy.
We've all heard of OpenAI and ChatGPT, which really kicked all this off at the end of calendar 22. And obviously, Microsoft has a huge stake in OpenAI. If you look at the numbers, though, from Microsoft, their June quarter, Azure, which is their cloud business, was growing 35%. Then that went to 34% in the September quarter, and they guided to 31 to 32. So the numbers are going down. If you look at Amazon, their cloud business has actually accelerated over the last 5 quarters from 12% to 19% growth. They're the biggest. And if you look at Google, which is the smallest of them, their growth actually accelerated from 29% last quarter to 35% in the quarter they just reported. So you've got to ask yourself, is Microsoft actually getting a return for all of this money that they're investing, when if you look at the numbers, they've actually gone down over the last 6 months. So that's the one that should concern you, and especially when you marry that with the valuation, where you're talking about a 33 PE, and the market, by the way, is trading at 24 times, that's the one that should give you the most concern, I think. The second one is obviously Apple, which you go, the company has grown revenues cumulatively, if you include this year, calendar year, at 5% over the last 3 years. And every product, people go, oh my God, Vision Pro is going to be terrific. And then you figure out, no, nobody's going to wear ski goggles on their head. And then you look at what's going on with the iPhone and the features that they've rolled out, which surprised me, they weren't particularly good to start with. They're going to get upgraded in December in the US, but then you have to wait for next year for it to get upgraded in the rest of the world. And you've got a company that's also trading at a 33 PE for 5% revenue growth over the past 3 years combined. And so that's the other one where if people finally go, you know what, the problem isn't this, it's market share losses to people like Huawei that have resurged in China, then that multiple could come down, even though you continue to do, low single-digit to mid-single-digit growth, which is what they guided for the December quarter.
Amazon has long been synonymous with groundbreaking innovation and disruptive market strategies. Today, this tech behemoth is navigating uncharted waters with its vigorous foray into silicon development endeavors. As articulated by CEO Andy Jassy, Amazon keenly acknowledges the invaluable support of its pivotal partnership with Nvidia. This relationship has been crucial for crafting state-of-the-art GPUs, vital for managing AI workloads with increased efficiency and effectiveness. However, Amazon's keen understanding of customer demands for improved price performance with the ongoing expansion of AI technology has sparked an innovative leap into silicon development. This initiative has led to the creation of Amazon's proprietary Trainium and Inferentia chips, which promise a fresh dynamic for price-performance standards in AI processing, potentially setting new benchmarks within the tech industry. Highlighted by Jassy, the imminent release of the Trainium 2 chip is earmarked as a cornerstone of Amazon's strategic ambitions. This chip is set to revamp customer expectations with its powerful value proposition, much anticipated in upcoming launches. Beyond this technical advancement, Amazon Web Services, AWS, remains robust, with an impressive 19.1% year-over-year growth, culminating in a staggering $110 billion annualized run rate. This milestone underpins strategic alliances with major industry leaders like ANZ Banking Group and Booking.com, reinforcing AWS's excellence in operations and security. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
I would ask you about macro. If there was ever an economic slowdown, maybe there never will be one, but I'm just wondering which companies are dependent on a strong economy. Are they dependent at all, any of them, on a strong economy?
Absolutely. I mean, the darling of this is obviously Nvidia, and we think for the next 3 to 6 months, they'll be fine. Yeah. But if you think back to COVID, what'd you see? Well, when COVID hit, we all had to get back online. And so Nvidia's revenues surged up 84% year over year at the beginning of 2021. Then when we all went out and did things and the hyperscaler demand slowed down, Nvidia's revenues went from being up 84% to down over 20% as they had to absorb all of that spend. Right. It's the same thing with AI infrastructure, where I think, as you get to mid next year, they'll have to absorb that spend and revenues are going to slow down more than anything.
Amazon's strategies are far from limited to single collaborations. Its 5-year contract with Databricks specifically highlights Amazon's commitment to advocate Trainium AI chips, a repositioning strategy poised to challenge and potentially redefine the GPU landscape. Adding depth to this narrative, Amazon recently reported third-quarter results that surpassed expectations, with net sales reaching $158.9 billion and earnings per share at $1.43, comfortably surpassing consensus estimates. Clearly, Amazon's bold venture into AI silicon development is as impressive as it is strategic, beckoning a diverse array of stakeholders to embark on this exhilarating journey. For seasoned observers where foresight profoundly matters, such strategic moves might hold more value than even silicon or gold. As Amazon continues to forge new paths in silicon innovation, it's increasingly clear that the company's vision extends beyond short-term gains. By championing new technologies and partnerships, Amazon is not just investing in cutting-edge technology. It is investing in the future landscape of technology. This strategic foresight ensures Amazon remains at the forefront of tech evolution, ensuring its innovations lead the charge in this digital era, with the potential to redefine industry standards. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
If you look at Nvidia today, if you look at semiconductors, so from that high on June 16th, June 17th, it was a 21% pullback in the semis. We're now up almost 10% since the lows on September 6th, and that's also with higher rates. And I would just say, if you look at a chart at Nvidia or the semis, you can see that ultimately they did bounce off the bottom end of that uptrend. And so, and I'm sure Carter's got a view on this. I just get back to the leadership that the markets have looked for on the index level is something that's come from semiconductors, and that's then led the NASDAQ, which has then led the S&P.
And meantime, shares of Nvidia up nearly 3% today for its fourth straight day of gains. It is now up more than 40% from its August 5th lows, less than 10% from its all-time high. The chipmaker kicking off its three-day AI summit this morning. Morgan Stanley reiterating the stock as an overweight rating. Guy?
I think it was a super micro move if you throw that one up. But, we've talked about this. I think Carter talked about it last week. You're in this pennant formation in Nvidia. It's going to break one way or the other. Today it shows signs of breaking to the upside, but I still think this pennant is intact. The June 20th level, the formation that Tim sort of alluded to, I think the stock closed above 140 that day and reversed. That's interesting. It's not been broached yet. So the question is, which way does it break? Is it going to break to the upside out of this pennant or the downside? Today's action suggests the upside. We'll see, though. It's not there yet, Mel.
And in the case of Nvidia versus an Apple, I think you obviously have two stocks where I would stay with Carter, and I just don't think the expectations in Apple are that great. Nvidia, we know they're great. And so now we've dealt with some production issues. We've had the company come back and pretty much reassure. Fourth quarter demand, they're saying is going to be extremely strong. And I get back to the stock, and I get back to even some of the market dynamics that have made Nvidia an outperformer, in addition to those ones that are obviously Nvidia specific. I think the macro supports Nvidia. I think it supports the names where you have growth, and I think the market is less worried about that multiple here.
In a world where technological dominance is no longer merely advantageous but essential for survival and success, Amazon's assertive forays into AI silicon development emerge as an alluring beacon to investors ready to explore untapped potential. The introduction of the Trainium 2 chip is primed to herald a new era of price-performance excellence, transforming AWS from being just a service provider into a linchpin of technological evolution at an expansive scale. As the market gradually absorbs and reflects on Amazon's outstanding financial achievements and far-sighted strategic intentions, the prevailing bullish outlook is set to trigger further substantial growth, propelling Amazon stock to unprecedented heights in the discerning eyes of investors. As Amazon pioneers these revolutionary changes, it beckons industry observers and competitors alike to ponder not just its current achievements, but the possibilities yet to come. This dynamic environment invites collaborative innovation, enticing thinkers, creators, and disruptors worldwide to envision the next technological breakthrough. The roadmap that lies ahead promises not just continual innovation, but an abundance of opportunities as Amazon employs its strategic acumen to redefine the paradigms of AI workloads. As we eagerly await fresh updates on Amazon's audacious Silicon initiatives, it is an opportune moment to consider how this significant strategic adjustment will recalibrate the tech landscape as we know it. What are your thoughts regarding Amazon's strategic move into AI silicon? Might these visionary strategies prove to be a tectonic shift for Amazon and the tech market at large? We invite you to share your insights and engage in the ongoing discourse as we witness these striking advancements in real time, heralding the dawn of a transformative era in technology. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.